Good morning. This is Bill Jenkins with the What is FX and FXTM Daily Alert Summary for May 9th. Pressure has remained on the euro, sterling, and Aussie overnight as euro fears continue on the increase. Greece still cannot put together any kind of reasonable coalition for their government, and in the meantime they are pretty consistently thumbing their nose, and their expectation is that they will be able to renege on their commitments made during the bailout negotiations earlier this year and still be able to stay in the euro. And that, of course, is problematic on a lot of fronts, but it's also problematic in terms of trying to forecast the markets if Greece is forced back to the drachma and forced out of the union. As all this unrest increases, we see it reflected in Spanish yields, which have crept slightly above 6%. But you want to remember that 7% is sort of the black magic number there. Spain, of course, being the third largest economy in the Eurozone, there is no bailout for them. Nobody really knows what's going to happen from here. Equities futures in the U.S. are sharply lower, and as we approach the morning open, we'll see if that changes. But for now, it looks like a continued down day with more pressure. The euro is going to be aiming to take out 129.50. That is sort of its next support area. Below there, that opens the door down to the 126 area. Of course, that will not happen all today, but that really is the next stop on the train station here, on the train railway. At the same time, our re-entries into the sterling and the Aussie have yielded 20 or 30 pips. We've moved those stops to break even and look for additional gains there today. But we move our stops up close because we don't want there to be sort of triple risk with three trades in the market if there is a quick or substantial turnaround. At 8:30 this morning, we will have 8:30, that is Eastern Time. We'll be having a speech from ECB President Mario Draghi. We remember that last week he gave a very bullish and optimistic speech which supported the euro, almost flying in the face of reality, but the markets bought it and they sent the euro up. However, a week later we see that reality is still what it is. Conditions have continued to deteriorate, so it's hard to say exactly what the market response will be, whether they see a man and his compadres who are completely out of touch with economic reality, or whether they would allow his optimism to bolster the euro once again. So that's one reason why we're pulling up our stops close there on the sterling and Aussie, so we don't have sort of a triple risk. We'll keep our stop where it is in the euro, still allow it to some room to work, and hopefully we'll see another leg down that will support all three of these trades and really make them pay off today. So that should do it. I'll see you next time. Have a good day and happy trading.